Hello and welcome to this week's Ferrari Financial Market News Summary. Well, last week saw more of the same, more volatility. In fact, we can categorize the last month as being a bit of a roller coaster ride. Wall Street is still very cautious. The recent rise in interest rates, the overhang of the declining housing market, the subprime lending problem doesn't help to build confidence in the market. And even though there has been some upward progress in the last 3 to 4 weeks, really we would still say that our feeling is the market is selling off at this point. When you see decline days, this is always on higher volume than the rather weak recoveries. Yesterday saw a good pre-day recovery, but we really feel this is just more of the same as we've seen in the last 3 to 4 weeks. The chart I want to show you now is the longer term 5-year chart for the Nasdaq Composite Index. The reason I want to do this is because not only do I want to show the obvious long-term trend line which we've shown before, going along like this, I also want to show you the top line forming a very tight channel for the price movement over this last 4 to 5 years. And if I draw this top line in to where we are at the moment, you can see we've got the price movement staying within this channel quite deliberately, and showing that we are in fact at one of those extremities at the moment, touching that top line, and we don't feel there is really any sparkling news out there which would convince the market to break through this top channel anytime yet and increase the angle of the upgoing trend. Therefore we feel the likelihood is still a return to the lower line again, which could be as low as 2,200 for the Nasdaq, and that is just returning to this long-term uptrend that we've seen over the last few years. And this could happen certainly within the next 2 to 3 slower summer months. The other scenario, of course, which we have to bear in mind constantly, is that we could be experiencing a fairly long-term head and shoulders pattern forming here. This being the left-hand shoulder. We've now risen up to what is probably the peak of the head of this pattern, and again decline down to around about the 2,200 for the Nasdaq could be on the cards for this pattern to be going forward to the right shoulder, which would be at about this level. And then the ongoing scenario from there, if it is a true head and shoulders pattern, is of course that in the fall we could then break through this sort of level, this level here, and experience a longer term downtrend towards the latter part of the year. We obviously don't want to see this happen, but we do feel it's a real possibility. If we do see the market declining towards the latter half of the summer, we do feel that the Federal Reserve should shoulder some of the blame. We do feel that holding at the present 5.25% rate and not really giving investors the feeling that a rate cut is coming any day soon is really putting extra pressure on the markets and possibly on the economy as well. We feel the Fed is focusing too much on inflation and not enough on basic economic activity. Only last week we saw a drop in the durable goods orders of 2.8% for May, the worst reading since the beginning of the year. If you couple this with consumer confidence hitting a 10-month low in May, down at 103.9, the overall picture is not one of steady economic growth at this point. Also, the weakness of the US dollar at the moment has to be a factor to be taken into consideration. So we still favour an overall short position for the Nasdaq market. We feel that that long-term trend line will be tested during these summer months, and that would be our advice. Stay short. Until next week then, it's goodbye from London.